Ever think about like the hidden forces that are kind of pulling the strings behind the companies? And ultimately, like even the economy.
Yeah, absolutely.
Today, we're going to dig into one of those kind of, well, silent giants, State Street Corporation. You might not see their name like splashed on every billboard,
Right.
but their reach,
hmm
it's pretty massive in the markets.
It really is. It's a story that goes way back. I mean, we're talking 1792, back when Union Bank was first founded in Boston.
Wow.
Yeah. And get this, the charter for the bank, signed by John Hancock himself, the first governor of Massachusetts,
Oh, wow.
and the first president, Moses Gill, who was the lieutenant governor at the time.
So like right from the get-go, this was no small potatoes operation.
Not at all. They were smack dab in the middle of early American commerce. I mean,
Yeah.
their location, the corner of State and Exchange Streets, those were like the main arteries of Boston's shipping industry back then.
So I'm picturing like tall ships, cobblestone streets, and this bank right in the thick of it. But how do we get from that, from that early American scene to the global financial powerhouse that State Street is today?
It definitely wasn't like a straight shot to the top. Things got interesting in 1891 when a competitor popped up, the State Street Deposit and Trust Company. By 1897, it was standing on its own 2 feet as State Street Trust Company. But then came a real game changer. In 1925, they merged with National Union Bank. That's when things really started to take shape in terms of their size and reach.
It sounds like that merger really set the stage for them to evolve. Because, I mean, you don't think of State Street today as your typical, everyday bank.
Right. You got it. Over time, they kind of shifted gears away from traditional commercial banking. They leaned more and more into this whole world of investment processing and management. That shift really culminated in 1960 when they officially became State Street Boston Financial Corp. But even before that, back in 1924, they kind of planted a flag in the investment world. They became the custodian for the very first U.S. mutual fund, the Massachusetts Investors Trust.
Whoa.
Yeah. So think about it. They were basically shaping the way that millions of people would invest for decades to come, acting as like the safekeeper, for this whole new way to pool investments.
Being the custodian for that first mutual fund, I mean, that's not just some historical footnote, is it? It speaks volumes about their role in shaping the investment world from those early days.
Exactly. And that global ambition really took off in 1972 when they set up shop in Munich, their first international office. Then in 1994, they launched State Street Global Advisors. And as you know, that's become a major player in the asset management world.
And that growth, I mean, it wasn't just from within, right? They made some pretty big acquisitions along the way.
Oh, absolutely. In 2003, they went and scooped up Deutsche Bank's Securities Services division for a cool $1.5 billion. Talk about expanding their global footprint. Then in 2007, they made an even bigger move, buying Investors Bank and Trust for a whopping $4.5 billion. That one really boosted their investment servicing muscle.
So it's a story of constant growth, adapting to the changing world of finance. And, in today's world, you can't talk finance without talking tech. When did State Street start getting into that side of things?
Well, they were early adopters. They saw the power of data way back in the 1970s and started building some pretty sophisticated data processing capabilities. More recently, in 2016, they rolled out this program called Beacon. It was a big push to make things even more efficient and upgrade their reporting tech.
Okay, so we've walked through their history. Now let's get into the nuts and bolts of State Street today. What exactly do they do, and what kind of scale are we talking about here?
Today, they're basically working on 2 main fronts. You've got investment servicing, sometimes called State Street Global Services. They provide this whole suite of services. They're the custodians, meaning they're basically the ultimate vault for trillions of dollars worth of securities. They handle corporate actions like stock splits and dividends, manage all the fund accounting, create the financial reports, make sure everyone's playing by the tax rules, and even offer legal support. And they do all this across a wild range of asset classes, stocks, bonds, you name it. Even things like derivatives, ETFs, private equity, and real estate.
That's a whole lot of moving parts.
It is.
And then their other big area is asset management, right?
That's right. That's where State Street Global Advisors comes in, and they are massive. We're talking managing around $4 trillion in assets. To put that in perspective, that's like the entire GDP of some major economies. And their clients are the big leagues. Pension funds, mutual funds, hedge funds, insurance companies, even sovereign wealth funds, representing entire countries.
Wow. So with that kind of reach, managing trillions of dollars, they must have a pretty big impact on the companies they invest in and just the economy in general.
Right.
So let's talk about competition. How does a giant like State Street, along with other big asset managers, affect how companies in the market compete with each other?
That's where their size really comes into play. It's this thing called concentrated ownership. Think of it like this. State Street, BlackRock, Vanguard, they often own big chunks of tons of major publicly traded
Yeah,
companies.
how big are we talking?
Sometimes 10%, 15%, even 20% of the company.
Wow.
Yeah. So this shared ownership across different competitors, it can subtly change the whole competitive landscape.
Subtly, how? I mean, it's not like they're calling the shots on a day-to-day basis, are they?
Not exactly. It's more indirect than that. Imagine you've got two big airlines, right? And a major asset manager like State Street owns a significant chunk of both. Well, there's less incentive for those airlines to get into like crazy price wars or expand routes like crazy if it means that their shared investors might not see those big profits. It's this subtle but powerful influence.
So it's less about them directly dictating strategy
Mhm.
and more about how everyone's financial interests are kind of aligned, which can maybe, soften the competition a bit.
Exactly. And it goes beyond just prices and market share. These big asset managers, they also have a huge say in corporate governance. They've got the voting power. They've got whole teams that analyze company proposals and vote on things like executive pay, who's on the board of directors, and big strategic decisions.
Right.
While they often go along with what the company's management wants, they can vote against things or even suggest changes. That can really steer a company in a different direction. And sometimes that means companies prioritize short-term gains for shareholders, which might not always be the best thing for long-term competition in the market.
So the concern is that this whole web of ownership among a few huge asset managers, it could lead to markets that aren't as competitive, across different industries.
That's a big concern, yeah. The worry is that this common ownership thing could end up creating a kind of oligopoly in key sectors. That could stifle innovation and maybe lead to higher prices or fewer choices for consumers in the long run. It's not that these firms are necessarily out to kill competition. It's more like a side effect of their huge portfolios and needing to get the most bang for their buck across all their investments.
It's like this financial ecosystem where the moves of a few really big players can have these ripple effects, some intended, some not. Now, what about the little guys? How does State Street size impact smaller companies, like small cap companies and regional banks?
Well, State Street, through its asset management arm, SSGA, they invest in small cap companies too. And their investment decisions can actually be a big boost for these smaller firms. It's like a spotlight gets shined on them, which can make it easier to get funding. And that influx of cash, it can really fuel growth and innovation.
So for a smaller company, having an investor like State Street on board can be a good thing.
Exactly. State Street's investment can create more demand for a small cap company's stock. That can drive up their value and make them more attractive to other investors. Plus, State Street's expertise in managing risk in small cap investing, well, that can help stabilize things and encourage other big investors to take a chance on these smaller companies.
That's an interesting dynamic, a huge institution like State Street
Yeah.
actually helping to grow smaller companies. What about regional banks? How do they fit into the picture with State Street?
As a major investor, State Street's choices can have a real impact on the health of regional banks. If State Street increases its investment, that strengthens the bank's capital, giving them more resources to lend and grow. Plus, having the backing of a well-known, respected firm like State Street, that can really boost confidence in the regional bank, attracts more deposits and investors, making them even stronger financially.
It's like State Street's investment becomes this seal of approval,
Right.
a sign that this regional bank is stable and has potential.
Exactly. It's a form of validation that carries a lot of weight. And, because of their size and influence, State Street can also participate in those regulatory discussions that shape how regional banks operate. They might even advocate for policies that help create a healthy, competitive environment for these banks.
So it seems like State Street's impact is pretty multifaceted. They're influencing the giants of industry, but also these smaller players in the financial world. Let's zoom out a bit now and look at the bigger economic picture. What are some of the risks that come with having this much financial power concentrated in one place?
Okay, so there's no denying that State Street plays a critical role in keeping the global financial markets liquid and stable, through their huge custody and asset management operations.
Right.
But when you have that much power in one place, there are some inherent risks that come with it. We've already talked about competition, but their interconnectedness with the global financial system means that any problems they face, or even just changes they make, could have a ripple effect across the world. It could even make the economy more volatile.
Okay, so break that down for me. How could one institution amplify those economic swings?
Imagine this. State Street, because they have investments in so many different markets, decides to quickly change their investment strategy. Maybe they see some risks on the horizon or the economy is shifting.
Okay.
Well, a big sell-off by State Street could trigger other investors to sell off their assets too, putting downward pressure on prices. Those kinds of large-scale movements of capital can really destabilize things and create this domino effect of financial trouble.
It sounds like having these massive interconnected financial players comes with a built-in risk to the system. Are there other, like, broader economic implications we need to be thinking about?
Definitely. Big institutions like State Street have the resources to lobby for certain economic policies. They can influence regulations in a way that might favor large investors, maybe at the expense of smaller businesses or individual investors. And some experts argue that the investment strategies used by these big asset managers can actually contribute to rising debt levels by encouraging companies to borrow more money. And the way they allocate their investments, that can even have an effect on inflation, especially if they pour money into sectors that are experiencing, supply chain issues or rising costs.
Right.
And then, of course, there's geopolitics. You
Oh,
can't forget about that. We live in a globalized world, and any kind of instability around the world can impact State Street's international operations, which adds another layer of uncertainty to the markets.
it's a lot to consider. It's interesting, though, that State Street, unlike a lot of big companies, doesn't have that single, iconic founder.
Right.
Can you tell me a bit more about how their leadership and structure have evolved over time?
Yeah, it's a really unique story. State Street is more like a puzzle. It was formed by merging different pieces rather than having one person's vision driving everything. We've talked about the early days, Union Bank in 1792, then State Street Deposit and Trust Company in 1891. That 1925 merger with National Union Bank, that was a big turning point. It created this larger entity that would eventually become State Street. And then in 1960, their incorporation as State Street Boston Financial Corp was the official signal that they were moving into the investment world.
Okay.
And then creating State Street Global Advisors in 1994 and taking on the name State Street Corporation in 1997, that really solidified their global presence and their focus on investments.
And while there might not have been a single founder, I imagine there were some key leaders who helped shape State Street along the way.
Absolutely. William Edgerly took over as CEO in 1975. He was the one who really pushed the company towards investment servicing, a move that turned out to be incredibly important for their future. In 1991, Marshall N. Carter became CEO. He led a major expansion of their global custody operations and brought their technology into the modern era.
Got it.
More recently, you have leaders like Jay Hooley and Ronald P. O'Hanley. They've focused on growing their asset management business and have been big proponents of sustainable investing practices.
So it's been this constant evolution of leadership, each building on what came before, and that's taken them from a local Boston bank to this huge global player in finance.
It really is. And the scale of their operations today, it's pretty mind-boggling. Their investment servicing division handles over $40 trillion in assets. Think about all the institutions and individuals that represents. And as we've talked about, State Street Global Advisors manages nearly $4 trillion in assets, influencing investment strategies across the world.
It really highlights how important these big institutional investors are. They're like the foundation of the global financial system, enabling the flow of money and shaping the direction of the markets. It's pretty amazing when you think about it.
It is. State Street's story has been all about strategic growth, adapting to the changing financial world, and having a huge impact on the global economy, even if it's not always obvious to everyone.
And when you consider how much money they're managing, it really makes you think, what about your own money? Your retirement accounts, other investments, what are those hidden forces working behind the scenes?
Yeah.
The ones that shape not just your returns, but the whole economic landscape that we all live in.